watching The Money Show. I am Kavita Thapaliyal, and this is your go-to guide for making sense of your money, from smart investing and savings tips to understanding the latest market trends and economic news. We break it down in simple, actionable steps so you can take control of your financial future. All you have to do is just stay with us as we explore how your money can work harder for you today and tomorrow. But before I go further, let's just quickly flash our WhatsApp number and our email ID where you can send across your portfolio questions. That's right, we do live financial planning on the show as well with our experts. So any specific financial goal that you want to, strategize for your financial future and want our experts' help, just send across those questions on our WhatsApp number and email ID. All right, coming back. Uncertainty continues to loom large on the global tariff front. That's still going on. But US President Donald Trump has once again warned that the United States could impose even higher tariffs on countries attempting to use the recent Supreme Court verdict to challenge previously announced trade duties. Now, that rhetoric is once again stirring volatility across global markets that we can see. Back home, domestic equities remain range-bound, hovering near crucial support levels as investors weigh global headwinds against local fundamentals. So, where do we stand now? That's the bigger question for you as an investor. How are valuations shaping up across large cap, mid cap and small cap segments? And sector-wise, where are the opportunities and not to forget the risk that's emerging? Let's decode all of this, the market trajectory in detail. I'm joined by Preeti Bhattacharya to break it down for us. Hi, welcome to the show, Trideep. And okay, so once again, the Trump drama continues. But before that, I just want to understand your current state or sense of the market that you're getting.
Kavita, thanks for inviting me to your very popular show. And hello to all the viewers. I would say that my prognosis is that after going through 12 to 15 months of earnings downgrades, India has entered into an earnings upgrade cycle, which on a bottom-up basis is good news for India. This was the last result season was the second quarter in a row where we saw earnings upgrades come through. And I think the markets are resilient, driven by that. However, the global front, while things seemed as though they are resolving themselves, particularly on the tariff front, it has become a little more confusing overall from a commentary that we are hearing. So net-net, if I were to assess the market situation now versus where it was 12 months ago, I would say our bottom-up India-specific situation is a thumbs up. Meaningfully better than where we were 12 months ago. 12 months ago, we were earnings downgrades. Now we are seeing earnings upgrades. The macro positioning is a lot more clearer. The interest rates are down. Government is focused on creating growth. On the other side, the global risks, which include tariffs, the currency volatility, and also the yen carry trade, these three risks, which are at the moment in front of markets, are all global in nature. And that's where you are seeing markets being in range bound. But bottom up, we are in a good spot.
All right, bottom up, according to you, we are in a good spot. But then, let's just take it sector-wise. And I want to understand the Indian IT sector and definitely the AI boom that's going on and causing destruction even in the global markets, especially the US. How brave one has to be to brace all of this if you are invested in IT?
So I think IT, like many times in the past 20 years, is going through another sort of a step over or change where one dominant trend takes over from the earlier, AI being the recent one. If you look at last 20 years, starting with Y2K, then package implementation boom, then software as a service, then cloud, and now AI. All of these are trends which at that point in time, they catch a lot of steam, creates a lot of investments, and the IT world has to orient itself towards that. This is what we are in the middle of right now when we talk about IT services, and particularly not only IT services, but even software globally. As the tech world kind of readjusts itself to the new reality, to the new trend, there are going to be disruptions. There are going to be a bit of a instability before it creates stability. We think that at the moment, Indian IT services as a sector is going through that, which is in the contrary. We have a technology fund where we have been overweight US tech and underweight India tech for the last 2 years. But hopefully, over the next few months, as the tech world grapples with it, we think that the valuations will start to become reasonable when they again become investable. But for now, I think the sector from a P multiple basis is going through a bit of a change, reflecting the new reality in the AI world than what it was. Our stance in this scenario is to watch out for stability before we step in to kind of, as you said, brave the tech world.
Right. One specific thing that we are hearing from the experts, especially on the AI wave, this looks to be, this seems to be looking far much more trickier than the Y2K in the past. Do you agree with it?
Well, when Y2K came through, people thought about the same. It's only that it was some time ago, so people have kind of forgotten about that. But yes, AI is amongst whether it was package implementation, SaaS, or cloud, this seems to be a bigger wave than all the three that I talked about earlier. And hence, to that extent, adjustment needed would be bigger than what it is. But my point of highlighting these trends is Indian IT services sector has evolved through these multiple trends over the last 20 years to eventually still survive and make good profits. And my suspicion is that if you give it enough time, they would do the same again. It's just that when you go through this adjustment phase, where one dominant trend comes to an end and the next one takes off, skill sets need to be upgraded. Services that are now in demand are different from that of earlier. Companies need to orient themselves towards the same. And as that happens, that adjustment phase is the troublesome phase, an uncertain phase from a market standpoint, which is what the sector is going through right now.
All right. You also highlighted that in your tech fund, you are currently underweight on Indian IT. Now, if the situation changes, or maybe it's like a positional call if you want to take on it, in terms of valuation, and also, are you banking more on large cap IT, or you are putting the buck on mid cap IT as well?
So at the moment, we are banking a little more on mid-cap IT because given that the base is small, the scale of adjustment is a little smaller, and they can pivot quickly around the new services. And having said that, overall, when you talk about valuations are still at slightly lower than 10-year average. So it's not really at the rock bottom level. So that's why I say some water might still flow from here in the next couple of months, and then valuations get to really interesting levels.
All right. Let's also talk about the Q3 report card. Now, how is it across the market sectors? You think it's more in favor of the large caps, or it's making much more sense for a better trajectory ahead in terms of large cap positioning after the earnings season?
And there, Kavita, I have good news to share, which is that if you, as I was highlighting in my opening comments, that for the last 12 to 15 months, India as a whole witnessed somewhere around 12 to 13% earnings downgrades. Now, with that in mind, after a lot of effort from the government, including GST reforms, tax cuts, and interest rate cuts, finally in September quarter, the previous quarter, we for the first time saw an earnings upgrade of about 2 to 3%. And that was good news from an earnings standpoint. December quarter, which is the result season that just went by, we again saw a 1 to 2% earnings upgrade come through. So this is the second quarter in a row where we saw earnings upgrades coming through. And my sense from what I'm hearing from companies is that the March quarter could be looking even better. So back to back 2 to 3 quarters of earnings upgrades certainly makes investor confidence go in the right direction from a bottom-up perspective. So on a Q3 scorecard basis, it's basically slightly better than expected. We've seen earnings upgrade on the whole. Some pockets of winners and losers, of course. but I would say that it's in the right direction.
All right. So, Tariff, thank you so much. Appreciate your insight as always. And yes, definitely, clearly, markets are navigating, between having this very delicate balance between global and global uncertainty and domestic resilience. But thank you so much for charting that out for our viewers today. Thank you.
My pleasure.
All right, on that note, it's time for a short break on the Money Show as well. But then post that, discussions on your investment strategies and portfolio continues. Stay tuned.